All right, greetings and thank you for joining us at futuremoneytrends.com. I have an excellent interview for you guys today. Listen up, guys. This was an advocate of Bitcoin at 25 cents. He happens to be the person who introduced me to Bitcoin. My video guy actually told me about Bitcoin, and then we saw Trace Mayer, this run to gold guy, gold bug guy that I had seen in other presentations in the years past. Now we're going back to like 2011, 2012 here. And Trace, I want to say Bitcoin was at $8, and then we finally profiled in our letter at 13. But most of what we know and most of what we learned about Bitcoin in the beginning was all from Trace Mayer. So he's got a special place in our lives, if you can imagine, what good has come out of it, not only for the Future Money Trends letter, but for our own education. And just Trace is a wealth of knowledge. I mean, you could talk to him for an hour about cryptos. You could talk to him for an hour about the history of a gold coin from 1,000 years ago. This is one of the smartest guys I know. So without further ado, I want to welcome onto the show Trace Mayer, host of the Bitcoin Knowledge Podcast. Trace, thanks for joining us.
Oh, thanks so much. What an introduction. But yeah, I guess it is kind of well-deserved. I keep running into people at conferences that are millionaires because they listened to me and bought some Bitcoin. So I really like having that type of an effect. I intentionally targeted the gold bugs and the libertarians so that we would distribute the wealth among people that might have a little bit better of an influence in the world. And now we're seeing that come to pass. So it's really exciting.
Well, you're a seed investor in many of these cryptocurrency companies, including Kraken, which most of our listeners are familiar with, the Bitcoin cryptocurrency exchange. And the credit is all due. I mean, you have to appreciate, and I'm sure you see everybody at different conferences and when you travel, but whether somebody's made a few $100,000 or $1 million or maybe even tens of millions, it's certainly possible. You have definitely improved the lives of a lot of people with that actionable advice. But I would also say that anybody who listens to you talk for 30 minutes about monetary history, my goodness, it's like you're reciting a book. I don't know how you remember all that stuff.
Yeah, I mean, it gets in there and rattles around somewhere. But yeah, for me, it's not so much about money or even making money. It's about monetary sovereignty, and it always has been for me. And so, gold and silver, they're not these barbarous relics, but they're essential checks and balances in our political machinery. That's why they're in the Constitution, just like freedom of speech is. And now with Bitcoin, and cryptography was upheld as freedom of speech in the mid-90s. We've got this intersection of sound money and freedom of speech, and it's just so critical to society in general, to humanity. And so this principle of monetary sovereignty, that's very much in my core purpose, and extending that to as many people as possible.
Trace, I want to kind of start the interview where the news is at right now. And right now we're kind of in a mania phase, a lot of adoption happening, a lot of people entering the Bitcoin market. So you are in tune with all of these companies that are and the infrastructure. You're really like, deep into the crypto market, and you're a power player. So I want to start off with this. Because of what's happening with these futures markets that are going to be opening up over the between this weekend and all the way into the summer of 2018, are you starting to speak and see larger institutional investors that are now attracted to Bitcoin after it's gone through some forks? It's gone through a lot. I mean, when you consider like going back even to Mt. Gox, so it's proven itself as an asset class. So are you starting to see and speak with larger institutional investors?
Oh, yeah. I mean, definitely. And the interest from these large institutional investors is actually extremely exciting. Last week, I was in New York City and had dinner with one of my friends out there, and he's very junior at one of the major banks, a bullion bank, actually, and a primary dealer. And he, afterwards he was like, I got some of my buddies down at work, like, you mind coming down to headquarters and like we can talk about Bitcoin while the trading desk is kind of slow, because he's like on the front row of the trading desk. And I was like, sure, I'll come down for that. So I got my jeans and t-shirt on and I'm headed down there, and he's like, please don't be late because the word kind of got out and now there's like 4 managing directors and like head of all these different trading areas. And I mean, they all wanted to just pick my brain. And I was like, well, that's good because it's not like I got a presentation for you or anything. But yeah, we talked about these CME futures and particularly just the potential risk because Bitcoin's limited in amount and these things are cash settled. So it's like, I'm not sure if you want to short this stuff, right? Because I mean, you got to deliver Bitcoins on the blockchain and there's 300,000 transactions a day for about $20 billion of value. And this is, it's as if the gold bars are melted down and recast every day. 100% quantity and quality is verified or assayed with every day with Bitcoin. And so, you know, if you're not actually sending Bitcoins that are getting settled on the blockchain, which is immutable, so you can't charge those back, right? Then you're going to have big problems. So if they try to naked short this stuff, and I was a consultant to GATA, the Gold Antitrust Action Committee, even before I even knew about Bitcoin. So, you know, if they try to naked short this stuff like they've done a little bit with gold, I think they're just messing with a whole different animal. Like it's just going to be, it might not end up very well for them if they try that.
Sure. Now, a lot of retail investors want to have some exposure, even if it's a limited exposure. And I'm sure the pension funds and the hedge funds and the other institutions are looking at, I mean, they're probably not going to put 10%, but look, 0.5%, 1%. But as you know, that's like the Pacific Ocean of liquidity trying to rush through the Panama Canal, or maybe something even smaller. Maybe, you know, as Doug Casey would say, like a fire hose. So, you know, when you talk to these guys, do you think it's going to, you know, do you think this is now being recognized as an asset class?
Yeah, it definitely is an asset class. It's just an empty one. There's $275 billion of value. That's nothing. There's 90.4 trillion of money supply out there, right? And you're exactly right. It's like connecting an ocean of liquidity with a tiny nanoscopic straw into a blueberry. And the thing is that there's plenty of Bitcoin for everybody. It's just a function of price. And so I don't know if you remember, and you brought up that 0.5% to 1%, but remember when we did that interview in December of 2013 at the Inside Bitcoins in Las Vegas? And you asked me like, oh, where could this price go? And I was like, well, you know, I was just meeting with Barry Silbert and he had the managing partner at Goldman Sachs or whatever the guy is over private wealth. And that guy put me on the spot, like, how high could this go? And I was like, well, if just 1% of offshore tax haven assets moved into it, you're looking at $2.8 million for Bitcoin. And I was the first person to put a multi-million-dollar like potential price target on Bitcoin, right? And so, but now we've had people like Jeremy Liu of Lightspeed, which is a major tech VC fund, put a multi-million, you know, put $500,000 price tag on it. And he did that in March of this year. We have Lloyd Blankfein, CEO of Goldman Sachs, talking publicly about it potentially being a world reserve currency. Then we have Jamie Dimon calling it a fraud, but saying it could go to $100,000 a coin. And then Michael Novogratz, former Fortress guy. And keep in mind, Fortress bought $20 million of Bitcoin back in 2013 and had to argue with their auditors about how to like treat them on the balance sheet. But he put a $10,000 target on Bitcoin and it smashed through that. So he came out and put a $20,000 target on it and we've almost smashed through that. And he's also put a $40,000 target on it for next year. So when we're looking at this thing, like the price really could go anywhere, which is what's so crazy. Because if people want Bitcoin, it's just a function of price. And it doesn't matter how high that price goes. You do not get any more supply of Bitcoin. It is limited strictly. Like if gold went from whatever it's at to $100,000 an ounce, every gold mine on the planet would be churning out new gold. And so we'd go from 76 million ounces of new production a year to, you know, maybe 150 million or even more, right? But with Bitcoin, it doesn't do that. You cannot increase the supply. It is unlike any other commodity in the history of the world. And so I just find it so fascinating that in this critical point in history, we have the top VC people in Silicon Valley. We have the top bankers in London, Singapore, and New York City, and they're all, and everybody is rethinking what money is at the global level, and they're all honing in on Bitcoin's beacon. You know, so is money in the future going to be dollars? Is it going to be gold, or is it going to be Bitcoin? Those are the only three contenders in the ring right now, and so it's just incredibly exciting.
Now, how about the application of Bitcoin of using it to spend? And if you can, let us know the differences of and how far it's come. Let's say in the United States and maybe some of these third world countries. I mean, is Bitcoin being used for its purpose of peer-to-peer transactions? Is it being used like any other money that is being used to spend?
Yeah, well, I mean, look at gold. It's not being used to spend, right? And yet it's got a 7 trillion market cap just from the speculation network effect that it has. But yeah, I just got back from Bogota. I was at the 5th annual Latin American Bitcoin conference, and there were people from Venezuela there, and they literally depend on Bitcoin with their life to get groceries because it's such a mess in Venezuela. But, you know, to get more to your point, with Bitcoin, we've got 7 different network effects taking place at the same time. And I talk about these extensively. I kind of coined it all. It's like, why do you hire Bitcoin? And it's these 7 different network effects, and we have different use cases that fall under each of them. But the first one is speculation. The second is merchants who accept it because people hold it because they're speculating on it. The third is consumers who use it because merchants accept it. And it might be malware ransom victims. It might be darknet markets, like whatever. It might be legitimate use cases too. Then we've got security from the miners, which brings on more security because all these other people are holding it, which raises the price. Then we've got developers who build applications on it because it's the most secure blockchain with the highest price. Then we've got the 6th network effect of financialization, things like the ETFs or these futures products. And then we've got 7th network effect of world reserve settlement currency. So what we're seeing right now is just the very beginnings of the first network effect of speculation. And your question about, currency, like using it in day-to-day transactions, well, Bitcoin pre-August 1st, 2017 and Bitcoin post-August 1st, 2017 are 2 completely different assets because SegWit, segregated witness, got activated. And segregated witness enables things like the Lightning Network, these layer 2 solutions, to be implemented because it fixes transaction malleability. Well, we just had the first successful Lightning Network transaction happen yesterday. This has been in development for years, and Lightning Network will enable, we're currently at a cap, we're capped about 300,000 transactions per day, 3 transactions per second. Lightning Network will be able to do thousands of transactions per second. Okay, so merchants and consumers can start using it in daily transactions. Well, what do these CME futures really enable? They enable large retailers like Amazon or Walmart to accept Bitcoin, but also hedge the exchange rate risk involved with it. So this is an example of where we have the 6th network effect reinforcing in an exponential way the 2nd and 3rd network effects. And so, there is no blockchain anywhere that has the scalability, the liquidity, or the security that the Bitcoin blockchain has. And all these network effects are exponentially reinforcing that position. And so Bitcoin is just in a completely dominant position. I mean, it uses more electricity than the countries of Morocco and Denmark. It's like we don't really see that. It's not particularly in our face, but I mean, this is a huge monster. And that's the 4th network effect of security, right? And so, we are going to, sure, we might be bumping up against the limit in terms of transactions that can be processed on chain right now, but Lightning Network is getting ready to be deployed, probably within the next 12 to 18 months. And then Bitcoin can be accepted at retailers across the board. And who knows, it might even come out even sooner. And so this is all extremely exciting because as I talked about, the supply of Bitcoin is limited in amount, totally fixed, right? And so you have to look at the demand curve. And there's there are two different main components. There's speculation demand, which is, people holding it, hoping the price will go up. And then there's transactional demand. And so those people hold Bitcoin for a very short period of time. They don't care about the price of Bitcoin because its ability to transfer value over a communications channel is equally good, whether it's 5 cents or $500,000. And what boggles the mind with pricing of Bitcoin is the price elasticity of demand for that transactional demand use case. The price is irrelevant, right? And yet that's where the buying happens on the margin. So if we have a huge increase in the liquidity of Bitcoin with things like Lightning Network, the price could just go through it could just be, it could blow your hair back like price discovery, which is incredibly exciting. So, $15,000 Bitcoin, $100,000 Bitcoin, that's just the first network effect of speculation. You mix in Lightning Network and these second and third network effects, and you're reinforcing them with the sixth network effects with these futures, and you're looking at a potential Bitcoin price it's just electrifying.
Trace, in the simplest terms for listeners, how do you compare the forks with Bitcoin Cash versus Bitcoin Gold so people understand what happened?
Well, I just look at them as cheap Chinese knockoffs. If they were so good and so powerful and so useful and so much better than Bitcoin, then why do they use the Bitcoin name? They just want to be confusingly similar so that they can trick people into buying them, new people particularly. And so, you kind of look at them, they've had all types of problems with them. Like Bcash has, it's still vulnerable to ASIC boost. It's had all types of huge inflation with the EDA, the emergency difficulty adjustment. And then Bitcoin Gold, they actually had malware on their homepage of the project's site that stole people's Bitcoins. And some guy lost 36 Bitcoins trying to claim his Bitcoin Gold. So really, you need to look at these forks as potential security vulnerabilities where they're trying to steal your money, with compromised malware software. So they hang a little carrot out there, here, pick up your $300 Bitcoin Gold. But in the meantime, you expose and make vulnerable your $16,000 Bitcoin to get stolen. I would be incredibly cautious about, using any of these other fork coins, especially if they're trying to be confusingly similar in the name, because they're just cheap Chinese knockoffs and they're likely just trying to steal your money.
Trace, for countries that are and regions of the world, including governments, which ones do you see that are embracing the cryptocurrencies?
Oh boy. Well, the best one on the map is probably the Isle of Man. They passed legislation a couple of years ago where you could use Bitcoin pretty much for everything. Proceeds of Crime Act, insurance companies, trusts, corporations could all be, regulated under that. Then you've got countries that are kind of middle of the road, whether it's Singapore or the United States or Europe or Canada. And then you've got other countries that are trying to catch up, like Russia, that seem to be open towards it. Then you've got just flat out hostile countries like Ecuador or Bolivia that have tried to ban it. Good luck with that. They can't answer their own emails, probably. They're so technologically incompetent down there. And then you've got places like China that are trying to regulate it, but maybe it's for a state purpose. Who knows? But yeah, Bitcoin is a new technology, and so it's changed the geopolitical map. So it's interesting to see the different moves. Like China, maybe they were holding up SegWit getting activated. SegWit gets activated, and so they come out with Bcash, and then you got Lightning Network, and so then China and Russia play their hand with this new gold trading platform. and Blockstream puts up the satellites to make it censorship resistant to go around the firewall, the Great Firewall of China. And after this gold trading program that they came out with, the U.S. is like, oh, we need to have CME, CBOE, and Cantor futures get traded like tomorrow. I mean, it's totally baffling. Like, I've been in this space, and all the regulators have done, especially in the United States, is just drag their feet. But, after SEGWA gets activated and Russia and China play their cards with this gold trading system, then it's like these futures have to get traded like tomorrow. It's like, hurry up and get these things out the door. Of course, they're like, oh, use the self-certifying procedure. So it's not as if the regulators are necessarily right off the bat approving it or anything, but it's almost as if there's like coordinated intervention with that. So it's interesting to see the geopolitical wheels turning, or maybe it's just delusions of grandeur, thinking that Bitcoin's more important than it is. But, you look at this and it actually could become incredibly important. And those countries which enable its innovation and adoption to happen will be in a much stronger financial situation than those countries that try to ban it.
Sure. Trace, do you think there could be a platform or a coin that rapidly interchanges people between all the cryptos, the altcoins and Bitcoin, as a way to solve the rising fee problem?
Oh, I mean, the rising fee problem is going to go away when Lightning Network, starts getting rolled out and adopted. In fact, Coinbase, if they weren't technologically incompetent, they could have segregated witness rolled out, and they could drastically reduce the block space that they're using, and fees would come down from that. So, the tools are there. It's just a lot of these companies, particularly the companies that are whining about the fees, they aren't availing themselves of the solutions that are there, largely because of their technological incompetence. And so, it's just, it really is kind of baffling to watch some of these amateur clown cars being run. But that's just what you get with this bootstrapped industry and bootstrapped protocol. And I mean, the entire ecosystem is creaking under the weight of all of this new traffic and adoption that's happening right now.
With there's adoption with Bitcoin, and do you also focus? I'm sure you do, with the adoption of blockchain. Let's say, I went to a conference a few months ago, and there was the Homeland Security people there, and Department of Defense, ExxonMobil, Microsoft, and it was funny because I've been to plenty of these conferences, and usually it's about Bitcoin and the cryptocurrency space, and this conference, I would bet that Bitcoin itself was only mentioned one time, and it was an all-day event. So it was pretty interesting just sitting around watching this, and people were focused on the secure communications that the blockchain can provide, or the oil people were talking about, where there was a 90-day verification process to change title could be cut down to 1 day.
Yeah, but they think, a lot of this, they think that blockchain is immutable. No. Blockchain is not immutable. Blockchain as applied in the Bitcoin protocol, that's immutable. But we got a ton of examples where blockchain is applied through other protocols is not immutable. So if you're talking about like changing title to significant amounts of assets, you want to have an immutable blockchain to do that. So why would you use something like Ethereum that has rolled back their blockchain and had proven it to be mutable or changeable? So Bitcoin is the only blockchain that has security, liquidity, and scalability. So, okay, like they're understanding that blockchain is useful technology. I understand that. Eventually, they'll run into that they'll need to use Bitcoin as the blockchain because it's the one that has the security. It's kind of like the early days of the internet. We had these networking components and everything and these protocols, but everybody tried to do intranets. So you had stuff like Prodigy and Genie and AOL, but eventually, like the internet won out and people wanted the interoperability to be able to go and access a whole lot more stuff and just have a lot more use cases. And so I see the same type of thing happening with Bitcoin. Sure, they might want to play around in Vitalik's playground, as he calls it, with Ethereum, but it doesn't have the scalability. It doesn't have the security. So like you can't really build something long lasting or sustainable on top of it, at least how it's currently applied.
Sure. And then in closing, Trace, just if you can kind of give us your big picture, what you see, how you see the next 12 months going for cryptocurrencies and Bitcoin.
Yeah, so the next 12 months, we've got this sixth network effect of the CME futures. It's going to be exponentially reinforcing the second and third network effects by allowing large retailers to integrate Bitcoin if they want to. As 50 Cent says, all money's money, why he is accepting Bitcoin for his songs. And so I don't see any reason why we don't have these large merchants start accepting Bitcoin. There's no fraud, no chargebacks. There's no PCI compliance or data to store. So it drastically cuts their costs down, saves them a lot of money over Visa or MasterCard. And that'll, increase the second and third network effects. And then, I mean, people just chasing the rabbit, I think it's just going to be a wild ride with price discovery. I mean, it could go up, it could go down. We could see corrections and consolidations, but then people start buying and holding, when the price goes down. And if they try to naked short it, Bitcoin still have to get delivered on the blockchain. And if it's a lower price than what the market otherwise would clear for, then they just have to deliver more Bitcoins. So that's, that becomes a very problematic thing because, the world is rethinking what money is. It's dollars, it's gold, or it's Bitcoin. And if it's Bitcoin, then you want to take as much territory on that blockchain as you can as measured in Satoshis or in Bitcoins. Because, in other words, you're basically buying the future productivity of the entire world's economy when you do that. So, it's very exciting. And, just strap in and have a fun ride, and don't get too attached to the price movements because it's gonna be all over the place like a ferret on meth.
Absolutely. All right. Trace Mayer, host of the Bitcoin Knowledge Podcast. You can check him out at bitcoin.can. If somebody wants to reach out to you, what's the best thing to do?
Yeah, probably there. I got an email address for my assistant or on Twitter. I respond to particularly fun or engaging tweets, and I like to put some of my own tweets out, and it's just at Trace Mayer over there on Twitter. So thanks so much for having me, Daniel.
Pleasure talking to you, and hope to see you very soon.
Okay. Ciao.